Weekly trades with precision, gold, silver, and commodity setups broken down with full transparency, wins and losses included. This is the Golden Nugget with Verified Investing.
Good morning and welcome to the Golden Nugget that happens every single Wednesday on the legendary Verified Investing YouTube channel, the Drew Wolfer YouTube channel, the Verified Investing Twitter, the Drew Wolfer Twitter, everywhere, wherever it is that you're watching from. We appreciate you. If you're wondering if the gold rally is going to continue, so far it is. We've got a massive short squeeze on silver. We took our first loss since, I believe, June. Last week, we went 5 or 6 on trades. It was either 4 for 5 or 5 for 6. I'll have to check exactly once we get into the TA on this. Took a very minimal loss. Everybody takes losses. With that being said, I appreciate everybody for showing up. Let's talk about what the Golden Nugget is, and then let's just get straight into it. I did see somebody, and actually a couple of people were saying, hey, if you could shorten this up a little bit and make it a little bit quicker, that would be great. So that's exactly what I'm going to try to do this week, because I know a lot of people, they show up for the breaks, but they stay for the trade. So we're going to still give you all of the analysis, but we're going to try to get to it as quickly as possible. So the first thing we're going to do is we're going to do the commodity compass, tell you everything that's happening inside of the metals markets and the broader financial markets. Secondarily, we are going to do what is called the Golden Nugget, which is my favorite segment. And we're going to give you kind of like a little piece, a little snippet of what you can expect inside of the golden opportunity, which is the training that I brought out in conjunction with Verified Investing that's available right now that anybody can go and get into and learn how to trade, not only in the metals markets, but pretty much every market, because technicals are technicals, baby, across all markets. Then what we will do is we will get into our one special segment, because we're going to condense it into one. Then we will gauge gold last, right after we do the Silver Snapshot, which is doing technical analysis on silver, then obviously technical analysis on gold, and talk about all of the things that are happening in the economic calendar before you see me again next week, faithfully, for the Golden Nugget. Now, the first segment, let's just get straight into it, get into the commodity compass. Okay, so gold has now, it hit our full target. $4,200. We took a massive trade last week. It was absolutely beautiful. Man, it's getting juicy. We love this stuff right here. We love gold, and we love silver too. We love silver. So, you know, I'm not gonna discriminate. I have both. I love both. Gold broke $4,200 though. Rate cuts. Okay, we're thinking rate cuts are probably going to come 2 more times this year. Is it going to be this month? I think so, but there's like a 97% chance of a rate cut this month. It's being priced in. Gold obviously crossed over $4,200 for the first time ever, okay? And this is a target that we were talking about last week. If we broke above a certain level, if we hit it, we would be going to $4,200. Then Bank of America has now upgraded its 2026 gold forecast to $5,000. So if you were wondering, like, hey, why is this on the thumbnail? $5,000, right? $5,000. Why does Drew look all, crazy? That's exactly why, because that's where I see gold going, okay, very soon. Now, could there be minor pullbacks and central bank buying on those pullbacks? Absolutely. Does that give us opportunities to build long positions? You betcha. So the U.S.-China trade tensions also are helping bolster that floor for gold, and China is one of the biggest gold buyers in the entire world, obviously. And the more we mess with them, the more it makes them want to buy gold and get away from the U.S. dollar, right? And then other countries, they kind of see that global superpower doing the exact same thing. Now, secondarily, on top of that, we have the government shutdown. So we know that the government shutdown is going to, kind of play a big role in this. Now, I want to get into our next segment. Now that we know what's moving the broader financial markets, let's get into the Golden Nugget, which is what pretty much everybody comes for, except for obviously the TA. People come for the TA too. But I want to show you what perfect market structure looks like, okay? So we are going to go ahead and just screen share, all right? We're going to zoom out to the daily chart. Excuse me. Give me 1 second. Okay. So this is what perfect market structure should potentially look like, all right? Now, this is not going to be necessarily like the most perfect market structure, but if we zoom in maybe to the 4 hour, I can show you even better, right? Okay. This is what perfect market structure look like. This is like more of smart money concepts. If you understand what market structure is, it's just a set of highs and lows, right? So we have a higher high, we have a higher low. We have a higher high, we have a higher low. But notice that the higher low uses the previous high as support. Okay, that's perfect market structure. That's what we want to see. That's what we love to see. All right. Then we have another higher high, another higher low. Again, uses the previous high as support. Another higher high, another higher low. Comes down, takes out that high just a little bit, but you can kind of see where we're going with it. Higher high, higher low. Uses and front runs the previous high as support. Higher high, higher low. Again, support. Higher high, higher low. Obviously, you were going to take this one out no matter what because you see how close these highs were, right? So higher high, higher low, higher high, higher low. You did not even come close to those highs. And then you've got higher high, higher low, higher high, and you'll probably see higher low right here if you get 41.50, right? So here's the lesson in this, right? A lot of times you're going to see these higher lows using those previous highs as support. Okay, that's what we call perfect market structure. And then, you can just reverse it to the downside, right? Lower, low, lower high, lower low, lower high, uses the previous lower low as support, right? Lower low, lower high, kind of see the stair steps there, right? That is what we would call perfect market structure. And that is kind of what we're seeing inside of the broader those metals markets, baby, the broader metals markets right now. We'll see if it continues. Gold is just absolutely tearing. It is on a absolutely parabolic run right now. We have a parabolic parallel on our charts for a reason right now, right? So let's get into our third segment. I just wanted to give you the kind of like market structure 101 really quick. All right, so and these are the things that I teach inside of the Golden Opportunity. So seriously, if you want a high level education, and you want to understand, like, how does Drew get these trades? How does Drew go 2 for 2, 3 for 3, 5 for 5, 5 for 6, 4 for 5, whatever, every single week and have an 88% win rate? And how can I do that too without relying on Drew to give me the trades because I only see him once a week? Get into the Golden Opportunity. Okay, so let's get into the third segment. This is called Market Movers. We're going to make it its own segment by itself, and then we're going to get into the Silver Snapshot and obviously Gauge Gold. Now, what is happening is a physical shortage in the London market. You're probably wondering, why did silver go parabolic and why are we seeing a short squeeze? Once we get above a certain level, and that level was about $50, right? There was going to be a massive short squeeze on silver. Secondarily, silver just hit its record highs above $53, and it was almost 50 cents at during the trading session, I believe, yesterday, and that was on spot, okay? Now, the futures have not caught up yet, okay? Futures are actually lower than silver is by like a measure of dollars, like $1, $2 right now. So just watch that because the futures kind of indicate where could we be potentially going in the future, right? Whereas gold's futures are above gold's spot price right now. Now, London inventories for silver specifically have reportedly plunged by 33% over, these recent years. And this is leaving very little freely tradable silver, okay? And if you know about the LBMA vaults and the London markets and, obviously the United States markets, the only way that they can offer gold and silver and these assets for trading is if they have the physical inventory, because if somebody takes physical ownership of it at the end of the contract, they have to be able to fulfill that, right? So as soon as the last, silver bar leaves gold, or not gold, but the London vault, they have to shut down their silver markets, right? So the premium for, London versus the US COMEX is actually in the $1 to $2 range. And honestly, they're literally taking silver right now rather than shipping over via sea freight, which takes forever, 30 days a lot of times. The US is flying it over there just to be able to meet the demand in London right now. Okay, this is crazy. All right, so just know that we are in a short squeeze on silver. We are in a supply crunch on silver. And if people continue to buy, it's only going to get worse, and that price is going to continue to go up. All right, but watch the futures markets. Now, let's get into what we call the silver snapshot. So the first thing we're going to do is get in here. We're going to go right over here, and we're going to talk about the trades that went well last week. We only got one trade on silver last week, unfortunately, okay? But the trade was good. The trade was good. I can't sit here and act like it wasn't a great trade. All right, so where was it? Did I put it on here? Yes, it did. Bang. Okay. So this trade, and we label these trades for a reason. We give all of the reasoning and basis and the parameters behind it for a reason. So we said, look, we have to long this 2.0 fib gain as long as we do not get an SFP at these highs, right? And as long as we get a bounce, right, from the 50 moving average. So what happened? No SFP, right? We came down here, we got a bounce from the 50 moving average. We regained the 2.0 Fibonacci. Then guess what we did? Bang, right there. We retested it, 50 moving average, boom, and now we blasted off. And obviously it took us a couple of days to get out of that position. But if you took your profits right here at about, I think it was like $51.20 or something like that, you got out within a day or 2 days, worst case scenario. So, this was an easy day trade. If not, you held it over the weekend. I don't usually tend to hold my trades over the weekend, especially in volatile times. Unless I've got like a big winner, and then I'm protecting my loss on the downside, right? Moving my stop loss. That is the only one that actually hit last week. We're not even going to go over like the ones that didn't hit. I'll just flash them on the screen if you want me to. But there's no point in talking about the ones that didn't really hit because it doesn't matter, right? It doesn't really matter because, these are just, none of them hit. Right? So let's talk about what we can do this week though. Okay. Well, first and foremost, right? We can long way up here. Okay. There cannot be an SFP of these highs. Okay. No SFP, no bullish divergence here. You have to come up here and set a new high, right? And then you have to back test right here, the 2.236 and these old highs right here, and use them as support to then blast off, okay? And that is where you would enter about $53.13 or so, somewhere in this range. Put your stop loss below the 50 moving average whenever you get up there, right? And then you would be targeting about $55.50, okay? So you got no SFP, no swing failure pattern or bullish divergence. You have to set a new high, right? You have to bounce from the old highs, right? And the 2.236, okay? That is your parameters for that trade, okay? Now, secondarily, if we come down here back near this 2.0, this $49.30 range, that is where the 200 moving average is, as you can see right there, that little green line that's trending upwards. And that is where our micro value area high is, right at about $50. So from about $50 down to about $49.30, you can think about entering a long there, okay? Now, you have to get a 2.0 fib bounce here. You cannot get under it, or you could get the 200 moving average bounce. Now, there's a bonus if you get a bullish divergence down here where price is trending down and setting lower lows, but RSI is trending up and setting higher lows. So that is a bonus that would give you a nice push to the upside. And then what you would do is you would ride that bad boy right back up to those highs at about $53.06 or so. Okay, secondarily, we can swing fail up here. If we come and we swing fail this high at about $53.50, you can start shorting. Now, what you would like to see is a bearish divergence there, right? And the previous day's high being rejected. So what do I mean by that? This is the high of the previous day right here at $53.54 almost exactly. You would like to see a swing fail up here. You see a wick up here and then a close below the high of this candle. That's a swing failure pattern. And then if you get a bearish divergence where you see this high, price is trending up, but you're setting lower highs on your RSI, right? Which you probably would, right? As you can see, that's a bearish divergence right there. If we were setting a new high right here, this would be a textbook bearish divergence because RSI is setting lower highs, right? So you would like to see that, and then you can start thinking about entering a short position. Now, secondarily, if we just reject right here at this 2.236, that is a short, okay? And you're riding it right back down here to $50 and about 12 cents. Secondarily, If you get below the 200 moving average and this 2.0 fib level at $49.30, you're just shorting right down here to the $45.82 range. Now wait for your confirmation candle, obviously, right? And that is what I'm seeing inside of these silver markets right now. Let's talk about gold, because we absolutely smashed it on gold last week. It was incredible, okay? Now, let's talk about the first ones that hit. This trade did not hit, okay? We never got our SFP. Give me 1 second, I'll show you. Gotta get back down to the hourly chart, okay? So, this trade did not hit. We thought we were going to get an SFP right here. We didn't get it. Bang. We just blasted straight through it. That didn't hit. Whatever. No big deal, right? Now, we did get this, okay? We came right up here. Bang, right? So, bang, we came up here. Came right down to the 2.618. We longed it and took it to those previous all-time highs. Obviously, front ran it a little bit. Bang. Now, but what did happen? We got the short. We got the short of this SFP. So we didn't get the SFP over here, obviously, right? We ran straight through it within 3 candles, but we got the SFP of the old all-time highs here. Bang, ran it right back down to the 2.618. Then what happened? Well, we got our long, right? Because as you can see, I mean, and this is just trading 101, man. We got our long. We got 2 wicks right there that happened, right? We got 2 wicks right there that happened, but then we got stopped out for like a 0.6 because it just, boom, just dropped out the bottom on us. So we lost on that trade. But here's the beautiful thing about trading, right? As soon as we got right back above that, as you can see, we set a low, higher low, higher low, higher low, higher low, bang. And then we got to enter. Now, did we get to enter at the best price possible at $4,007? No, we didn't, because we had to wait. We had to wait until we got our confirmation right here, our back test, our higher low, and then we got to enter right up here at around, $4,030. But we got to run it all the way up to our previous target, which was this right here on, where's it at? Our target was $4,200, right? So what did we do? We entered, no big deal, and bang, we ran it right back up all the way here to $4,200, okay? And now we can think about, where do we position again? Now, the other trade that did hit was this trade right here, right? Whenever we got under here and then we rejected here and we came down, but I honestly closed this trade out before the weekend. I closed this trade out right here because I didn't want to hold this trade over the weekend, not knowing what was going to happen, especially with a bull run in gold right now and seeing that we were setting higher lows. We closed this out. And it was like, I think it was like a 0.6% win, which took care of that one loss that we had, right? No big deal. So let's talk about what we can do now inside of the gold markets, because that's what matters, right? So first and foremost, if you get a swing failure pattern and a bearish divergence at the all-time highs and the 4,200, just above the $4,200 level, this is where you can start thinking about shorting, and you can short it right back down here, at least to these previous highs right here, these previous all-time highs where you can see kind of triple top, bang, 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 right? Or at the very least, you can ride it down to these lows, right? You can ride it right back down to these lows, 2.5x risk to reward. So you got to manage your trades. You got to manage your trades. Watch these moving averages as they're moving up, okay? Trading is not passive. It is managed. So secondarily, we can long this right here, this 2.618, which is at $4,007. It's the same trade we just took, right? You can long that and the parabolic parallel. You're probably like, what's the parabolic parallel, Drew? Well, its top is right here at about $4,030. So from about $4,007 to about $4,030, you can start longing, and you're also longing that 200 moving average bounce. So this is going to be a really key area of support that we have to uphold so that we don't set a lower high or a lower low here, right? Technically, we would be setting a lower low if we broke down outside of $4,091, but from a macro perspective, we would not be setting a lower low there. Secondarily, if you get below this 2.618, man, that's pretty easy, right? You're shorting right back down to these triple top highs right here, this previous all-time high section, and bing, bang, boom. Obviously, watch your swing lows when you get down there. Swing low, swing low, swing low, right? And manage your trade. Then we have a little bit riskier of a trade here, but this is if we continue to trend up, right? So say we come up here and we set a new high, right? We've set our low. this is perfect market structure, right? This is perfect market structure as it sits right now. We used the prior low or the prior swing high. Here's your swing high. Here's your prior swing high. Here's your swing low. So we came down, we used that swing high as support. Now, if we blast up, we get a new swing high, and we use this next swing high as support, that is where you can start entering, okay? But the one thing you do not want to see, you do not want to see a swing failure pattern at these highs. You do not want to see a bearish divergence up here where you are setting higher highs on the price and lower highs on the RSI, okay? And secondarily, you do not, or you want to see the 50 moving average and the old high being used as a bounce point. So this is the 50 moving average. You want to see it trending up here. You come back down, bang, and boom. That is what I am seeing inside of the broader metals markets right now. And let's see what happens, man. Let's see what happens. So hopefully this is a little bit shorter of a video for people, but I want to get into the economic calendar. Let's see if we can go, 5 for 5 this week. I don't think we're going to go 5 for 5 because I didn't give out as many trades, but maybe we go 2 for 2, right? Now, we have today, obviously there was at 8:30 a.m. we had real earnings for September. Secondarily, we have the PPI coming in hot tomorrow at 8:30 a.m. You have to pay attention for this. Key inflation input, right? Then on Friday, U.S. import and export price indexes, okay? This is going to tell you about your trade prices and the pressures on them, okay? Tuesday, we have state unemployment and employment for state level labor data. Now, does that get pushed off because of the government shutdown? I don't know. We will see. On Tuesday at 10, these are both at 10 a.m. on Tuesday. We have usual weekly earnings of wages and salaried workers. Then we have the JOLTS data on Wednesday, right before you see me at 10 a.m. This is a broader labor demand metric. Okay, you have to pay attention to this. And then next week we have CPI, baby. That's coming out for September. It is delayed. Okay, so if the government shutdown is still happening, we might not see some of this data. And, again, just pay attention for what's going on inside of the market. So with that being said, I appreciate you all so much for showing up. Let's see how many trades we can win if we get any trades this week, obviously. And, we do have a couple of big announcements for everybody coming up over the next couple of weeks that I think everybody's going to enjoy and be able to take advantage of. So if you would like to learn how to do this yourself, get inside of the Golden Opportunity. I will be there with you every step of the way, and you can do it at your own pace, and you can pick what you want to learn when you want to learn it, and you don't have to rely on me to say, hey, I'm going to show you market structure this week and blah, blah, blah. You can go and find that stuff for yourself inside of the Golden Opportunity. So I will see you all.
Imagine waking up every day with freedom. No boss, no clock, just you, your charts, and profit stacking. That is the life of a verified pro trader, and it's exactly how I built mine, by learning to trade gold the right way. I've helped countless members start winning, and now it's your turn. This is your golden opportunity to trade like a pro, live like a boss, and take advantage of the gold super cycle that is transferring wealth like we've never witnessed before. So make this your golden opportunity.